What's up, guys? Welcome back to another video. Um, we're gonna talk about. Actually, no. First of all, sorry for being away for so long. It's not even like you guys watch these videos all the way through, so it doesn't really fucking matter. But yeah, as you guys know, the elections happened a few days ago. Obviously Trump won. That made the market move pretty high. SPY's up a lot. Let's actually take a look at SPY right now before we dive into Netflix, which is what I want to talk about. SPY's up 596 today, which is wild. It's about to hit 600 like tomorrow. So thank God it's Friday, you know. Fuck yeah. Yeah, I mean, SPY's going at it. It's fucking crazy. The market's going at it. And the reason why I'm talking about the market right now and the elections is that because the market is doing so good, other companies are doing good. So I want to take a look at Netflix. Netflix was on my setting up watch list for quite a while. As you guys know, I tried to get into Netflix actually a couple months back. As you can see, it was this pattern right here as we're looking at. Remember this exact trend line? It was like right here, and it kind of like broke out, if you will, like a little bit. It went sideways. Again, Netflix, like this was a really good company. Me and my friend who are doing like the virtual stock game at school, we have $100,000 to play with, or to buy stocks. Personally, I bought Netflix. We can look at that right now. I bet you we're doing very good on Netflix right now. I will check in with you guys. Hold on, let me pull this up real quick. I'm just gonna look at the numbers. I'm not gonna show you the account. Actually, I could probably show you the account. Hold on. Let me pull it up real quick. Where's my second one? Okay, so Netflix, look at this. Why is it not loading? Netflix, we are up. This is my trade. We're up $941. Pawn, which is also my trade, we were up 9,900, 1,000. TSM is also my trade. We're up $2,000 on that. So yeah, not bad. But Netflix is performing for us. Obviously, Netflix has done some really good results. But like I said, I try to get in on it. Oh shit, did I just close? Oh no. I tried to get it on it a few months back. Obviously, as you saw, it didn't work. And then that was the whole period where like the Japan market crashed, whatever interest rates, whatever the fuck happened there. Some shit happened. I can't remember. And then they had the interest rates move back to 70 or like 0.75 or some shit like that. And then so everything went back up. Market fixed itself and then, you know, kept going sideways. And then obviously Netflix came back to that previous level. And then these are actually the days that, well, this is where I bought Netflix for our competition. Right after this went up, I saw that this was obviously hitting a brick wall, right? It was still going sideways. It was a major key level. I was like, fuck it, we're buying Netflix. Netflix has some recent news that are going to come out. There's like an NFL streaming platform that's going to be coming out with Netflix. Like there's a lot of NFL deals that are coming. That's a lot of money to be made. The earnings are definitely going to be good. And so I definitely predicted that. As you saw, the earnings came out. It absolutely fucking crushed through the roof. I actually remember this day. I was with my dad visiting Babson up in Massachusetts, or in Boston, my bad. And yeah, I mean, it was fucking, I was telling him right there and there, like, holy shit, me and my friend are making bank off Netflix right now. Like, it was fucking crazy. I only invested, like, not many shares into Netflix, and I'm almost making $1,000 right now, so it's pretty fucking dope. But yeah, so here's the thing. It actually fits the category because right after this, I put this on my watch list after it gapped. I put this on my gapped watch list, but I also put this on my setting up because this actually fit the criteria of big company, big institution with high volume, high market cap. Because look at Netflix. Netflix has a 340 billion market cap, average volume of 3.3. Obviously, the volume changes every day, right? But if the volume is above $1 million, right? If it's fluctuating, if it's above 3 million currently, then if it goes down a little bit, it's not going to go down all the way to like 500K, right? So that's a lot of volume being lost. Netflix though is a very volatile company. Like you can see, it can have some really good days and then lose it all back and then gain it all back in less than a week. So Netflix is definitely one of those like crazy ass fucking companies. Its P ratio is only 42, 41.6, but 42. But it's got a 2.3 range, right? So that's like its average range that it moves is 2.3%, which is actually pretty accurate to the ADR that I'm about to show you in the entry that I'm about to show you. But as you saw, this meet the criteria, right? So big institution makes a big move, and then we want this to go sideways. We want this to hit the EMAs. I'm going to remove them real quick so you can kind of see what's going on. But you can see like right here, if I just draw this like that, right? Or if I even make it more like that, right? You can see what's happening, right? Like you just look at that and you're like, damn, that is a triangle, right? It's like a flag. And you can see that the only parts that actually hit the candles or like the line are the actual like the highs, right? Not the bodies. The bodies are staying thin. That's thin, that's thin. That's thick, but that's hitting the line. That's thick, but that's hitting the line. Thin, 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 thin. Like obviously I've said this before, I can't get more perfect than that. But like I'm trying to show you how like this pattern is. And then all you're looking for is obviously this pattern. So this like wedge pattern, if you will. And then you're looking for the EMA. So either EMA or MA. I prefer the MA. You can do both. I'm doing both right now just to show you. I'm going to remove these lines real quick just so it's easier for you to see. But you can see that the price actually starts hitting these EMAs, right? So it hits the MA a little bit earlier, but the MA is a little more aggressive. The EMA kind of lags behind. The EMA is a little more accurate. The MA is definitely more aggressive. That's why I use both, just in my opinion. But you can see they're very similar to each other. And so yeah, so all you're waiting now is for a candle to, or multiple candles to touch the EMA, right? To make sure that it goes sideways, to confirm the sidewaysness, if you will. And then you're just waiting for a spike in volume, right? So as you can see here, that spike in volume happened when earnings came out, and then it died down. Obviously, duh, right? Died down, and it just kept dying down. And the only time it broke out of the volume was on breakout day here. So like that was a pretty big breakout day. Now, personally, I'm going to show you two ways you could enter this. There's the first way, which is on this day, which I'll talk about in TradingView, or this day. So let's go and switch over to that right now. Let's go to TradingView and let's talk about how you could have entered on here. So let's go to the daily real quick just to see this. I don't have the EMA on TradingView. I like to keep it pretty simple. I made a script. If you guys want it, let me know again in the comments. I made a script that shows you the option contract that you should buy. And you can obviously have the, you can put in your inputs, your style visibility. I made all this, so if you guys want it, let me know. So the ADR, right, for this, as you saw on Webull, the daily range is 2.34%. I have an indicator down here that measures 100 days out that also told me 2.34. So it's pretty fucking accurate. Now, the thing is, I like to make money and not be super risky with my money. And if you like to be like me, right, 3.4 is just a little bit extra. So in my personal opinion, if you want to be quote unquote like risky, would be putting the ADR higher, right? Because if you understand the strategy, I'm not going to say it over and over. The higher ADR means the more you're multiplying per day, right? Days holding. So 2 times 4 is 8% from that current move. So if you do 2.5, that's 2.5 times 4. So that's more percentage that it has to move. And that contract is actually going to be further away because it's plus percent away from the breakout price. So if you want to be more risky in the contract, you go with a higher ADR or a more accurate ADR, which is 2.34. If you want to be more safe and you want to play it where that strike option call is either most definitely getting hit or close to being hit, then you go less with the actual ADR. So the actual ADR is 2.34, at least at that current day, right? Or breakout day, thin days, whatever you want to call it. I just did 2. Now you can do, for example, you can do 1.5, okay? Hypothetically, you can do 1.5. Let's do 1.7 just so we're in the middle, right? From 2.3 to 1.5. Let's do 1.7 just to be safe. You're holding it for 4 days, right? You click OK, right? So I don't have the labels here, but it would show you, I made the script so it would show you, what the fuck were my labels? It would show you your labels here and like where to do it. Now this obviously is a little bit late because this shows me the actual day, like this day right here. So it looks like I'm buying on that day. So that's wrong. Obviously I'm not going to do that. So I'm going to turn those labels off and I'm going to come back and you'll understand why I'm saying this. So now that we have the ADR, we're going to look at how you'd enter. Obviously, you'd have to draw this out, blah, blah, right? You go on the 1 hour, you decide, okay, where's my, well, I do have this drawn out, but I don't have the EMAs, but you could see these, this is like setting up some strong support. You can obviously see that, and you can see that, even on the 1 day, it got very thin, like super, super, super thin. Now, there's 2 days you can, treat this as a breakout. 1 day to me is controversial, which is the one I'm going to go over first. And the second day is more, I guess, aligned with the strategy. And the only reasons I say that the first day is here, this day right here, is controversial, which is this day right here, right? We're looking at this day in the 1 hour, but it's this day right here. It looks like a breakout, right? But it technically is a breakout. It's not very strong though. So you could enter on this day or the next day. It doesn't matter. The reasons I say this is because if we go to the 5 minute, okay, so let's scroll back. Whoops. This is the breakout day, right? So imagine this is the trading day. The blue line is the what's called the, I guess the resistance, the breakout line, if you will. You can see that on that morning. Let's actually go to the 5 minute on Webull because I can show you the volume. It's this one. Okay, so you can see that here we have the 2 charts here. I prefer using Webull because it has the volume, but you can see here that it breaks out for just a second or so, and the strategy tells us that you go on the 5 minute and you enter off the 5 minute highs. So if the first 5 minute candle highs get broken, that's where you enter. So that high right here, that green line, is where you would enter. So if that black candle all of a sudden turned green and it closes above, that's where you buy, right? If it trades above and it closes above, soon to be above, like close to being above, that's where you buy, okay? As you can see, Nflx didn't break above, it went straight down, and it created the low day. Well, actually, low day was that candle, so you also mark that. And that's your entry range, right? So low day, if you enter, that's where you get out. If you don't enter, well, you don't get out at all because you have no position. But the thing is, I want to talk about is the volume. There is volume. There's volume here. So this is considered like, that's good, right? From an outside perspective though, let's look at the other breakout day. This is the other breakout day that happened right after. We're going to be talking about that real quick though after that. So this actually probably would be the best breakout option for you if you were to enter this. So yeah, it breaks out here. It comes back, right? You're waiting. You're not in this, so this stop loss doesn't matter. It trades back here. Boom, bam, catches itself. It comes back. You enter on this big like green candle, right? Now, let's talk about it because if this is where you enter, and remember we have the ADR at 1.7 and you're holding for 4 days. Obviously, you're holding the contract for 4 days, but you're going to hold the contract for a little more. We just want to be safe here. We're being safe. If you want to be a little more risky, like I said, you increase the ADR and you increase the days. Okay, we're going to be safe. We're playing it safe. So from this day right here, right now, you can see the option contract calculator can tell us exactly what the contract is going to be. It's going to be at 8:16. So then what we do is on that day, when we're trading, we go to the options. Obviously, it would be like 8 days now, so here. And you go to 8:16. And 8:16 would be, well, okay, so there is no 8:16, so you buy 8:15. Now, obviously, because we're not fucking stupid right now, 8:15 right now is at 390. Or actually, no, mid-price. No, where's mid-price? 410. Okay. Obviously, a few days ago, it was not at a 410. It was probably a little bit cheaper. I'm guessing it probably moved like 2 spots, maybe 3 spots. It was probably at 224. It was probably less than that. It was probably more than that. Who knows? You're probably making $100. Who knows? You're making probably 10%, if not a little bit more on this contract. Another thing I want to look at is we're playing it safe here, right? So 8:15 is a safe contract. Now, if we want to play a little bit riskier, another way I can already tell that this is safe is because if you look at the open interest, because people like me are also doing this, the open interest currently is 813. If you look though, there's open interest for down here at 835. Okay, there's open interest as 820. And And see the open interest down here dies off like 880. Like no one's going for that, right? In 8 days, maybe they're making money, but no one's gonna, like, the highest open interest stops at 835. So that in my mind tells me that at 835, let's just go to the day. You're telling me that in 8 days, most people think that it's gonna be at 835. So let's mark 835 is here. Okay, so most people think, oops, it's gonna be up there in 8 days, which, I mean, reliably, I think this could possibly be something that possibly hits. Now, I'm only holding it for 4 days. I'm only using the ADR of 1.7. 815 seems like a reasonable target because 815 is only like right here, for example, right? So it's just a few days left. And so yeah, 815, you buy, obviously you'd be making some money. And then if we go back to the 5-minute real quick, you can see that yes, throughout the day, the contract is going to lose some value. It's going to be probably not negative, but it is going to lose some value. You can see that it ends the day barely above that candle. So the contract itself, that day you bought it, might not be the best, right? You're hoping for a day where it just shoots off and your contract can be higher value, right? But the thing I want you to remember is that it never hits the stop loss, right? Because that daily stop loss is where your permanent stop loss is. Obviously, if you're starting to make profits and you're selling some and you take 1 profit, 2 profits, you'd move your stop loss to break even. So you're not losing all your money and all your profits, right? That makes sense. But the moment you take profit 1, that's when you move your stop loss to break even. If you don't take any profits and you're holding it, then guess what? That's it. Like you don't move your stop loss. Now you can notice that the next day, right after that, it bumps up to 777. But this is pre-market. It opens at 771 and it just dumps. And this is a common Netflix thing I've noticed. Like Netflix loves to go up and then it loves to dump and then it loves to dump and then it loves to go up. Netflix will shock your heart like in minutes. It will flatter your heart or it will break your heart in seconds. It will dump. It looks like all of its share, all its company shares, everything. Like this could be a big move for Netflix and then it could just fucking dump it all, right? Now look at this. It hits the daily line, right? So it supports and then it comes back up, does not hit the stop loss, so you'd still be in your contract. Yes, you might be losing a little bit of money, but it gains back, right? Over time, it gains back. And you can see, obviously here, this is the one I said that this would be the best entry. But the thing is, I mean, you could buy that. Personally, I would buy it off the daily highs up here, right? So the daily highs, you'd buy off that daily high. So you'd buy, when it comes back up here, you'd buy here on that candle or on these candles, right? And if you're buying here, so the day later, let's say you're not doing 815, you forget about that. You didn't want to get on this day, you get on this day. So let's look here and make sure we have this. Yeah, okay. If you're buying on these candles, you'd want to aim for 819. Yeah, 819. So like only 2% above 815 or 4% above 815, right? So it's there. I mean, it's right up there, right? So you're only buying a day late. You're only missing out on what? What's the percentage here? You're only missing out on 1% of profits, right? And then after that, Netflix just rips. It keeps ripping, and it just keeps ripping, right? So that's that. I mean, that's how I do it. Again, this tool right here that I made, the option strike price calculator, the only thing you need is to know the ADR. And you have to know how to play the ADR, right? Do you want to be more aggressive? Do you want to be more safe? And then all you have to do is know that. Then you put in your ADR here. Then you know how many days you're going to be holding the contract. Now, mind you, if I'm holding a contract for 4 days, I want to save myself. Like if the contract gets completely fucked or Netflix goes down and I'm fucked, I want to have enough days to either recover, right? Or not completely fuck my contract and make it not like an what's it called? Squish, right? The thing is, if I buy, let's say I buy today, the only contract I would want to be looking at is either the 8-day or the 15-day. The 1-day or 0-day option tradings are like extremely risky because you're saying that you're betting the company goes up or down, whatever you're doing. in one day. Like at the end of the day, that's where you think price is going to be. That's extremely hard to predict. And people that do that are extremely, like, they're geniuses. And it's hard. I'm not going to say it's gambling, but I've lost money doing that. Okay. So the safer route is to say, okay, if I hold this contract, knowing for 4 days, knowing that every day it supposedly is supposed to do X amount of percentage, right? Because it literally tells me here, average daily range percent is 2.3% or 2.3%. That means that every single day it should move 2.3%, right? Up or down, doesn't matter. Either way. So in my mind, I'm like 2.3% times 4, that should be more percent. And then from wherever you buy it, it should be that percent above the price you buy it, right? It's that simple. That's how you want to invest. And then all you do is, if that's for 4 days and you have a contract that's 8 days, then think about it. That 8-day contract hits your strike price in 5 days. And so you're making a whole lot of fucking money. And if it wants to keep going higher, guess what? It can, because it only expires 3 days later, right? Because you have an 8-day contract, you bought it for 4 days, you're holding it for 4 days. Then after 5 days, let's say it takes one more extra day to hit your strike price. 5 days, it hits your complete strike price. You're in the money, which is good. Then you have 3 days there. You have 2 to 3 days for price to either go even higher for you to make even more money. And by the time you're there, you've already sold some profit, so you're break even. So you're not losing money. All you're doing is losing more money that you could be making, if that makes sense. I know it's confusing, but that's really all you're doing, right? Like, that's it. The hard part is finding the fucking stock. Netflix, I mean, this is a fucking great one. Again, I'll be watching this like very closely. Obviously, tomorrow's Friday, so market closes after that. Then it's the weekend. Monday, as you probably saw, it's National Bank Holiday, Veterans Day. It's gonna be institutional. Maybe can be. I don't think everything will be. Looks like some stuff will be open. It doesn't matter. Anyways, Monday will be low volume. What I'm trying to say is this is hard, right? Like, this, you have to find the right stock. What I'm trying to do right now is just educate and just fucking keep looking at stocks, keep doing my watch list, keep doing what I'm doing. Obviously, I'm definitely less active in Discord because no one has shown interest. Definitely fell off, but that doesn't matter. I'm going to keep posting, keep uploading, right? I know I've been gone for a while, and if you're still here, then congratulations. Like, you're going to see me rise to the fucking top, and you're going to be a fucking millionaire with me. Let's fucking go. But other than that, I'm going to leave you guys with that. We're going to check on if you guys are still here, let's go ahead and check on the game that we're investing in. Nvidia, we're not investing in that at all, but it's doing really fucking good. TSM is the company I invested in a couple weeks ago, actually, did really good on earnings. Still going up. Obviously, if Nvidia is going up, TSM is going to go up. ATGL, it's going up. DJT is going down. Fuck yeah, bro. It's at 25 right now. This is good. This is really fucking good to hear. Because we shorted DJT when it was at 15. So, yeah, we were down. We shorted DJT when it was at 15. And, yeah, it went up to 54. Yeah. So, it's good that it's coming down because we're going to lose less money. AMD, I mean, just kill me now, bro. AMD has been an absolute shit show. What can I even say, bro? AMD is a good buying opportunity now. Like, this is where you buy it, right? Like, it dips, it comes back, it dips, it's going to come back, right? Obviously, I bought shares when it was up here, so I'm kind of in the I'm losing like $3,000 on this right now, but, you know, it's AMD. It will come back. We'll go back to break even. Netflix, I already went over it. Smith & Wesson, yeah, I don't know what's going on with this one. Lunar, brother, I wish we put more money in this fucking thing, bro. Lunar went up to 10, bro. This shit went up to fucking 10. I don't know what catalyst. I'm pretty sure it was the Trump election. Exactly, yeah. Because he was for space and shit. Fucking huge catalyst. I mean, this is crazy. Lunar went up. And the reason is, like, we have some history with Lunar. Fucking huge thing. But as you can see, we have some lines. We've definitely invested in Lunar. We've definitely lost a little bit of money. But we got back into Lunar, and yeah, we're making some money now. And then Pawn Alto, fucking incredible, man. Like, look at this shit. I invested down here when it was at like 335 in the game. It's at 389, man, or 387, man. Like, holy fucking kick, bro. I'm a god. Yeah, 389 aftermarket, bro. I'm a fucking god, bro. Like, look at this fucking shit. I invested in Palo Alto because Nancy Pelosi invested back here months ago, like beginning of the year, about 200 calls, and now it just surpassed its all-time highs. Like, call me a fucking god, bro. Come on, bro. All right, I'll see you guys next time. Peace.